Our nation is back, bigger, better, richer, and stronger than ever before.
Donald Trump offers a defiant defense of his policies and economic record during his State of the Union address as the U.S. president faces falling poll numbers as well as policy setbacks. Trump also reiterates he wants a diplomatic deal with Iran, but says he would never allow Tehran to own a nuclear weapon. And HSBC profit beats as its wealth division gets a boost from client income. We hear from the group CEO, Elhedery. Well, this is Horizons Middle East and Africa. It's just gone 9 a.m. across the Emirates. I'm Johannesburg in Dubai. Well, we're just coming off Trump's State of the Union address, and it was very long. Actually, I think it was the longest ever in history, tapping almost 2 hours, and essentially touting a lot of the achievements of his administration, doubling down on that topic of affordability, but also doubling down on tariffs as well as one of his preferred instruments for the economy. So in terms of what we learned, we're going to discuss that more in the next 10-15 minutes. But ultimately, let me take you back to markets. There wasn't that much of a reaction in markets during the course of his speech. But what we did see yesterday is somewhat of a rebound in Wall Street. Remember, the big theme that's been playing out the last couple of days, of course, you had that Supreme Court ruling on tariffs, but actually the bigger theme on Monday was to do with the AI scare trade and that report that came out suggesting that AI was beginning to disrupt serious parts of the economy. We did get that pullback in software stocks. Yesterday, however, we rebounded. So tech stocks, semiconductors, chips, the likes of AMD having a good session as well, with Meta announcing a deal and partnership there. And so putting it all together, we've got S&P futures just shy of 7,000 this morning, basically trading around flat. The USD slipping a little bit, down 0.2%. So that has been a new phenomenon, I would say, this week, because for the last month, we actually saw some support come in for the USD. That has not been the case throughout the course of the last couple of days. And then treasuries. Remember yesterday we were talking about the flight to quality bid into safe havens. Treasury is one of the beneficiaries there. Today sitting at around 4.05, marginally higher in trading. So we're stalling around 4% here. And then Brent, again, it is a very sensitive timing and period for this region geopolitically. A lot of geopolitical premium is still being priced into the energy complex. Let us see how those Iran-U.S. negotiations go in Geneva on Thursday, and whether there will be some form of a breakthrough, or if there's no success there, the real possibility of military action remains on the table. So that's something to watch out for there. And then switching over, just want to point your attention to the fact that these semiconductors, chips, have actually been doing pretty well. And so when we talk about the AI theme as a whole, you really have to start distinguishing between the picks and shovels, the upstream part of AE, the applications, the implementation. Chips, and especially memory chips, continue to see a very strong bid and very strong demand. That's another theme for this year. And so you can see this is the ratio of the semiconductor index within the NASDAQ to the NASDAQ. And it just tells you that semiconductors are continuing to get a bid relative to the broader index. They're slowly catching up with Magnificent Seven. So something to bear in mind. Okay, let's broaden this conversation out and check in on how markets in Asia are faring. Min Min Lo is in Hong Kong for us. Min Min.
Hey, Jumana, yes, it's a tech theme again, once again in favor in Asia. It looks like that rebound we saw in the U.S. also translating in the Asian session. And yes, we did see the dollar sliding when Donald Trump was speaking, and Asian currencies, Asian stocks becoming firmer. And here you can see the Kospi now breaking above the 6,000 psychological level. Another record high, 3% higher now. Again, the tech giants like Samsung, SK Hynix helping to lift the index, TSMC as well. And the Nikkei also seeing gains here, partly because of weakness in the yen as well, after Takaichi expressed some apprehension over rate hikes. Hang Seng up by 1% after Financial Secretary Paul Chan gave a speech earlier where he gave a very upbeat forecast for Hong Kong's GDP, 2.5 to 3.5% this year. He said last year GDP, he said, came in at 3.5%, which is the strongest since 2021. A lot of goodies for the tech sector, tax incentives to encourage certain financial sector products as well, especially when it comes to gold trading. You flip the board, take a look at the currency market right now. We did see dollar sliding, and here you can see that the Aussie dollar and the Taiwanese dollar are the big gainers in Asia. Aussie dollar gaining because we had the CPI data come through today hotter than expected, and that has raised bets that the RBA could raise rates in May and potentially a third time in November. The yuan continuing to point lower, and yen starting to reverse earlier weakness, but we have Takaichi nominating 2 reflationist academics for her next BOJ picks, and that is keeping the yen at a softer level, close to 156 per dollar.
Yeah, because basically the thinking there is that they'd be more inclined to keep rates on hold. So interesting. Min Lo in Hong Kong, thank you so much. Let's go back to the State of the Union. President Trump has offered a defiant defense of his economic record during his State of the Union address. He also spoke about the tariffs that were recently struck down by the Supreme Court.
And then just 4 days ago, an unfortunate ruling from the United States Supreme Court. It just came down. It came down. Very unfortunate ruling. But the good news is that almost all countries and corporations want to keep the deal that they already made, right, Scott? Knowing that the legal power that I, as president, have to make a new deal could be far worse for them, and therefore they will continue to work along the same successful path that we had negotiated before the Supreme Court's unfortunate involvement.
Well, for more, let's bring in Bloomberg Chief Asia Correspondent Rosalind Matheson in Singapore. Rosalind, I was just talking about the length of the speech, almost 2 hours long, and a lot of it, as it's very customary with these Trump speeches, touting the administration's achievements. Did we actually learn anything new in terms of policy announcements or focuses of the Trump administration as we head towards the midterms?
Well, very little in the way of new policy announcements in this speech. As you say, a very long speech and very much like a pep rally, reminiscent of his campaign rallies, and that's the way that Donald Trump likes to roll. So, of course, we had military heroes, we had sporting heroes, a lot of touting of his achievements that he says he's made so far, you know, obviously talking up the economy because he's watching very closely the clock ticking towards the US midterms this year. So this speech, while long, was very much geared towards a US domestic audience, talking about the state of the economy, saying that there are better times ahead, blaming the Democrats for everything that he says has been going wrong, but really talking about inflation going in the right direction, jobs going in the right direction, saying prices are going in the right direction. There was only one small snippet, really, of policy announcement, and that was that he would top up non-employer 401ks to the tune of $1,000 a year. It's unclear how that policy would work or what through, but there was very little fresh meat to hang on from the speech and for markets to look at. It really was one of those very lengthy Donald Trump pep rallies.
Yeah, I also saw, you know, there's a few comments as well about rising energy costs, pumping a bit more oil, making the data centers pay. But as you say, not a lot there. But he did, of course, speak a lot about foreign policy, about their so-called win in Venezuela earlier on in the year, and also spoke about Iran and his preferred solution at this point would be a diplomatic solution. Did we get a better understanding, perhaps, of what their foreign policy objectives are for this year?
Well, very much, again, couch to the idea of making America strong, making other countries pick up more of the load for defense spending around the world. So the idea of, like, projecting strength for the US. And that, again, was very much a message for American voters versus those abroad. As you say, he ran through his hits of what he said were his achievements, the conflicts he says he's ended, the raid, of course, in Venezuela that captured Nicolas Maduro, the state of affairs with Iran. There he did talk about what he calls Iran's sinister ambitions, but equally he said that he does still favour getting to a diplomatic solution with Iran. The most interesting thing, really, in his comments on foreign policy is he didn't mention China in all of it. He talked about the war in Ukraine, he talked about NATO in Europe, he talked about Gaza, but he didn't mention China. He really didn't talk about Asia very much at all. And this is, of course, only weeks before he's due to meet the Chinese President Xi Jinping, a country with which the US has had long-running trade tensions, security tensions, and so on, and not a mention of it in his State of the Union speech of nearly 2 hours. So that's quite telling. Does that mean that he doesn't want to really inflame things with China before the meeting, or is it just really not on his radar right now?
Yeah, interesting. Or perhaps he's just being careful ahead of that Xi meeting in about a month's time. Bloomberg Chief Asia Correspondent Rosalind Matheson in Singapore. Thank you so much. Well, let's get the market analysis now with Ben Powell, Chief Middle East and APAC Investment Strategist at BlackRock Investment Institute. He joins us from Riyadh this morning. Ben, good to have you with us. One thing that I didn't discuss with Ross is the fact that on tariffs, President Trump gave no indication that he was going to change course. Of course, he's very unhappy with the Supreme Court decision vis-a-vis the IEEPA, the use of reciprocal tariffs. But he also seems to suggest that this is going to continue to be part of the U.S. economic toolkit. As an investor, how do you read the knock-on effects from Friday's decision and then Trump's subsequent decision to impose a global blanket tariff of 10% that could move to 15%?
Yeah, good morning, Joanna. I think it's a surprising degree of continuity, actually. So, of course, very important news flow from the Supreme Court. Very interesting speech today or yesterday evening American time, where President Trump really doubled down on tariffs and the centrality of tariffs, not just as an economic policy, but a critical part of his approach to rewiring global supply chains and even foreign policy in a broader sense. So it seems that even with all the kind of sound and fury in the last couple of days, tariffs are going to continue to be a central pillar of how President Trump deals with the world. That should mean, from an economic perspective, ongoing inflationary pressures in the goods sector, and perhaps more importantly, uncertainty. It's very difficult if you're running a country, a central bank, or more humbly, an investment portfolio, trying to work out country by country what the tariff rates are going to be over the next several years, perhaps even over the next several months. So that uncertainty, we think, is going to continue, and tariffs very much here to stay, even with the Supreme Court ruling from the end of last week.
Yeah, it's interesting, though, that the market reaction was more pronounced to this Citrini research report than it was to the Supreme Court ruling. And I wonder whether now, again, there is this reevaluation of the so-called AI trades going on, and that you have to be a lot more discerning about where you're deciding to invest. The winners, the losers, the disruptors versus the parts of the industry that are getting disrupted. How are you thinking about that, Ben, and looking ahead to 2026? Are you just staying clear, or are you spending a lot more time trying to navigate these various parts of the market?
We are absolutely spending a lot more time trying to work out the nuance. So, being bullish AI, that's fine. It probably is a hinge moment in human history. So we're on board with the kind of claim that it's a big deal. But that's not sufficient for an investment playbook and investment portfolio. We need to be much more specific as to exactly where we want to be bullish. And what I would stress is the constraints being a guide to where we can find opportunity. So the AI super boom is leading to shortages of chips, shortages of copper, and so forth. And it seems to us that those shortages likely are investment opportunities. Shortages need more supply. We need more copper, maybe as an example. In order to encourage that, we're going to need to see higher prices. So the AI story, we're very much on board. But again, we're going to need to be much more nuanced, much more specific on exactly what that means across geographies and across asset classes. But it's still front and center, I think, Joanna.
There was also a big pullback, not just in software stocks, but private equity funds as well, who've been betting big on the space. A report from UBS overnight caught my attention, saying that they're expecting a 15% default rate in the private credit space. Is this a ticking time bomb that we need to be mindful of in this market? And remember, this goes all the way back to that cockroach comment that Jamie Dimon made towards the end of last year. I mean, maybe we are staring at a potential systemic credit risk emanating from the private credit space. So what do you think?
I mean, of course, as a market participant, we're always appropriately paranoid and worried, and therefore watching this issue extremely carefully. I think it's still a bit of a leap to get to systemic. For now, that can change, Johanna. So, of course, we're open-minded, we're thoughtful, and if the data changes, we'll change our minds accordingly. What I do think this is a clear reminder of is the importance of differentiation. So we really believe that this is a time for active investing, and that's true whether you're picking sectors, picking themes, or even picking how you deploy your capital into private markets. It seems to us private markets are an increasingly mainstream part of portfolios all over the world, but of course they're not all the same. So I'd make my nuanced comments around AI. I'd also bring that to bear here in the private markets kind of space. We need to be very, very careful, and have there been at the margin some private credit lenders who've been less careful? Probably. That's quite normal. So I'm not too concerned for now, of course, watching carefully. But the real point here is to be appropriately nuanced and selective when we're thinking about where to deploy capital.
Ben, thank you so much. Ben Powell, Chief Middle East and APAC Investment Strategist at BlackRock Investment Institute. Well, coming up, President Trump warns he would never allow Iran to own a nuclear weapon as Tehran threatens to shut down the Strait of Hormuz in retaliation of any U.S. strike. A look at what's at stake next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The U.S. president used his State of the Union speech to reiterate he still prefers a deal with Iran. It comes as Donald Trump has previously warned he is considering a range of options for military strikes if talks do not lead to an agreement. Iran has also threatened to shut down the Strait of Hormuz in retaliation. But Trump says he won't allow Iran to have a nuclear weapon.
We are in negotiations with them. They want to make a deal, but we haven't heard those secret words. We will never have a nuclear weapon.
Let's get more now with Ziad Dawood, Bloomberg Economics Chief Emerging Markets Economist. Let's just pick up on that line from the State of the Union. Trump wants to hear them say this, what he's saying is secret words or the special words, we will never have a nuclear weapon. And I think this is probably the setup that we have going into those negotiations on Thursday. The U.S., of course, still insisting on what we think is a zero enrichment policy, the Iranians still potentially standing their ground. There appears to be a lot of differences still between the two sides. Are we confident that maybe a diplomatic breakthrough could be achieved this week still?
No, there is not much confidence, Jumana. I think in any war or strategic situation, you have goals, you have methods to achieve these goals, and you have the consequences that you have to prepare for your actions. And the thing that's confusing us as analysts and confusing markets is at the initial stage when it comes for the US and Iran, the goals are not clear. At times we're talking about no nuclear weapons for Iran, but President Trump himself said in June that he had obliterated Iranian nuclear program. At times we're talking about preventing the killing of protesters. President Trump has mentioned that thousands were killed already. At times we're talking about no ballistic missiles. And at some points there was even talks about regime change in Iran. President Trump himself had said that the best thing that could happen to Iran is regime change. So once you determine the goal, which we don't know what it is, you then start talking about the method, whether it's diplomacy or war. If you're going for a minimalist thing, which is a nuclear sort of agreement, then maybe there is hope. But if you're going for maximalist, which is regime change, then obviously violence might be an issue. And there'll be consequences for that because there's a lot of US troops in the region, there's a lot of US allies in the region, and there's loss of energy that's coming from the region to the world. Yeah, absolutely. So let's talk about the energy that's coming to the region. I mean, for so long, whenever analysts think about the possible retaliation from Iran, our thinking goes straight to the Strait of Hormuz. But actually your colleague Dina Sfanderi, you've written a piece up on the terminal today which breaks down what Iran's options are on the Strait of Hormuz. And it's not so easy for them to just close it indefinitely, is it? No, it's not. And the reason why we're talking about Hormuz now is because Iran also has run out of options. Previously, we were talking about the network of proxies and allies in the region that Iran could defend itself and create deterrence through. Now that option is not so available. So Hormuz is a center of attention. And what we wanted to look at is we wanted to look at the mechanics. How can Iran close the Strait of Hormuz? And there are four methods. Iran could harass ships. It could strike ships directly. It could block it through, creating blockage through the strait, the narrow waterway, or it could fill it with mines. Now, that doesn't mean it can be closed forever, because the US can counter this. It can escort ships, it can strike back, and can use minesweepers to remove the mines. The problem is this. You don't want to make the Strait of Hormuz a narrow waterway through which 20% of global oil, some glass that goes to the world, become an arena of war. You don't want it to be a stage where you have strikes and counter-strikes, because that will have an effect on oil prices, and that will have an effect on the global economy.
Yeah, and currently your piece says we have about $6 of oil premium, geopolitical oil premium priced in.
That's right.
Currently. Ziad, thank you so much. Ziad Dawood, Bloomberg Economics Chief Emerging Markets Economist. Well, HSBC beats profit expectations as its wealth business fuels another strong year. The CEO, Elhedery, told Bloomberg he remains confident in meeting the bank's updated targets.
We are very pleased with the 2025 results. I think the key message, Haslinda, to take forward is, number one, we are performing, and this performance is delivering good earnings, strong earnings, and is delivering strong growth in all four businesses and all the key indicators that we look at, and strong distributions to our shareholders with the increase of dividend by 14% to 75 cents per dollar. The second key message is that we are transforming with precision, with discipline, and we're doing it at pace, and we expect to be able to conclude a number of the actions we set out to do earlier than initially planned. And the third key takeaway is that we are confident in our ability to meet our upgraded targets, and we're therefore investing for growth to be able to deliver growth. We shared that we expect now for 26, 27, and 28, we've targeted for 26, 27, and 28 revenue growing every year, rising to 5% in 28, and we have targeted a return on tangible equity, excluding notable items, for each of these 3 years of 17% or higher.
But Georges, there are still some concerns. The Hong Kong and Chinese commercial real estate weighing on your numbers. You book a charge of $700 million. Have you seen the worst, and what are you anticipating? When do you see a turnaround?
So first, Hong Kong remains a structurally high-growth economy, and we have strong conviction in the opportunities available for us in Hong Kong. We have a market leadership position, and we're consolidating our market leadership. I mean, testament to that, as you called out earlier, Haslinda, is the privatization of Hang Seng Bank, which we completed ahead of time. The growth opportunities are multiple. Hong Kong is on track or poised to become the world's largest cross-border wealth hub before the end of the decade. We have a leadership position to capture these opportunities. Hong Kong is a major trading hub and the super connector between the mainland, and the world, and those flows. We have a leadership role in capturing these opportunities. So these underlying structural growth opportunities are real. Insofar the Hong Kong commercial real estate is concerned, we've always believed, and we continue to believe, that this is a cycle. We know this market very well, right? 161 years in this market. If it's a cycle, when we look through the cycle, we are constructive and positive about the medium to long term. We already see signs of normalization in the residential space. We already see some easing because of interest rates coming off and the supply-demand dynamic improving. Right. And we will support our customers in the short term, but we remain constructive of how it will evolve in the medium to long term.
That was Elhedery, HSBC Group CEO, speaking to Haslinda Aman after their earnings came through. A beat mostly led by strong results in their net interest income and also in wealth management as well. So the stock appears to be trading positively today in the session, up 2.6% in Hong Kong. As for broader markets, well, let's take a look at how equity futures are shaping up, because we've shook off some of the pullback that we got 2 days ago in yesterday's trade. So actually we saw a positive session for S&P and for NASDAQ as some of those AI scare trades subsided. But of course, as we look ahead, big events coming up today, and those are going to be NVIDIA earnings, which is the poster child, obviously, for anything AI related. So we'll see what the reaction is going to be to that. European markets also up around 0.2%, and we're still digesting some of the main takeaways from President Trump's State of the Union address. Not a lot in terms of new policy announcements, but of course, one of the longest, or actually is the longest State of the Union address in history, touting a lot of the Trump achievements, both domestically with the economy and on foreign affairs as well. Now, coming up, as the AI scare trade recedes slightly, we discuss whether the disruption fears are valid or overblown with Arya Bolurfrushan, CEO and founder of AppliedAI. That's next. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Donald Trump offered a defiant defense of his policies and economic record during his State of the Union address, as the U.S. president faces falling poll numbers as well as policy setbacks. Trump also reiterates he wants a diplomatic deal with Iran, but says he would never allow Tehran to own a nuclear weapon. And a rally in technology shares lifts Wall Street, extending into Asia as concern over the disruptive effects of AI eases after weeks of turmoil. It's just gone 9:30 a.m. across the Emirates. I'm Johanna Bersachi in Dubai. As you can see, a bit of green on the screen. The handover from Asia Pacific, pretty positive today, robust handover. We did have the State of the Union from President Trump, a very long one. Not a lot in terms of policy announcements, focus on affordability in the U.S., as well as a few energy policies, but also doubling down on his commitment to implementation of those tariffs, with the new blanket tariff around the world now having gone into effect yesterday, 10%. He plans to raise that to 15%. But what we saw, the reaction in markets yesterday was actually one of, well, brushing it off. You had a rebound in S&P, NASDAQ as well. S&P rose 0.8%. The NASDAQ actually jumped 1.1%. Some of those AI displacement fears have subsided. But for how long, we'll see. We're going to discuss that with our next guest. Today, S&P futures leaning sideways. Big event today. We've got NVIDIA after hours, so stay tuned for that. Obviously, poster child of the AI trade. So we'll see whether the company can actually beat very high expectations from the street to begin with. The USD slipping today, a little bit in trade, down 0.2%. 10-year yields continue to get a bid, given all the money that's going into safe havens on geopolitical uncertainty, but we're stalling around 4%. So we're up about 1.5 basis points this morning. And then Brent sitting at $71, so close to those 6-month highs, up 0.6%. All eyes on those Iran-U.S. discussions in Geneva on Thursday, and whether we can actually get to some form of a diplomatic breakthrough. Switching over, and our terminal chart today, I wanted to flag, it's a different one from the one that we had at the top of the show. No, actually, this is the same one. And this is what I wanted to flag also, is that we are seeing a lot of money going into semiconductors. So what's happening now is people are beginning to distinguish between different parts of this so-called AI trade. And one of the big themes this year has been the sheer amount of money going into memory chips, into chip makers, the South Korean indices, Taiwan, big beneficiaries of that. And even within the NASDAQ, you're seeing that the ratio of that semiconductor index to the NASDAQ has started to climb upwards, i.e., you are seeing that money is beginning to go into more and more into semiconductors, perhaps at the expense of the broader Magnificent Seven basket as well. Okay, let's also check in on how markets in Asia are faring. Min Min Lo is in our Hong Kong studio for us. Min Min, what's on your agenda today?
Hey, Jomana. Yes, tech is absolutely in favor again in Asia. You see that in the Kospi, in the TAIEX, and on the Nikkei as well. But we're zooming in particularly on the Japanese markets because of the gyrations in the currency market here. We have Takaichi, for example, local media reporting that she was apprehensive around potential rate hikes. But BOJ's Ueda, however, said that she has not given any specific directive to the BOJ. And we're seeing the yen earlier in the yesterday actually sliding, today reversing adjusting a little bit, but remaining at close to 156 level. So still pretty weak. And at the same time, she has now nominated 2 reflationist academics as the next BOJ members. And that has revised expectations around the pace of potential rate hikes in Japan. And so we're seeing, yes, the Nikkei is up, topics as well, but we're seeing a cap to the limit of how much topics can rise because of the banks index that is now a drag on the broader topics index. And you flip the ball, we're taking a look at Hong Kong as well, because Financial Secretary Paul Chan has just delivered a speech earlier. A lot of interesting announcements that he made. But first of all, he gave a forecast of the GDP 2.5 to 3.5% this year. That's quite robust. We are seeing the Hang Seng up by 0.6%. The property index up by 0.4%. So overall, still doing okay, even though if you look at some of the big names like Henderson, Sun Hong Kai, some of these big property developers actually declining after he announced that the government will raise the stamp duty for ultra luxury homes. And that's against the backdrop of the stabilization in the property market. There has been a series of measures to boost the financial sector in Hong Kong as well, particularly the aerospace sector, to streamline or speed up the listing process for those companies related to the aerospace industry. And then also Cathay Pacific up by 0.6% as the government announced the budget allocation to boost tourism in Hong Kong.
Great stuff. Min Min, thank you for walking us through it. Min Min Lo in Hong Kong. Now, the AI disruption fears that have been rattling markets for weeks are receding slightly. Tech shares in the U.S. have rallied, and we're seeing that follow through in Asia this morning. The AI scare trade that's driven sell-offs across multiple industries was sparked by concerns about AI's potential to render entire sectors obsolete. To discuss further, joining us is Arya Bolurfrushan, CEO and founder of AppliedAI, and I'm sure a gentleman who knows a lot about this topic. Before we get into it, I just want to give you the opportunity to explain to us a little bit more about what AppliedAI does. Your flagship platform is called Opus. What do you do, and how is what you're offering different from what's already in the market?
Thank you, Joanna. Honored to be here. We at AppliedAI do one thing, which is help enterprises rewire to become AI native. We call ourselves the world's most boring AI company because we really focus on kind of the real business gains in the back office.
Okay, how do you stand out then?
So we believe innovation begins in parts that are very boring. So the first thing we do is we help enterprises do business process re-engineering. So to really understand what is the intention that they want to do their process, and then how to reimagine it and have it deployed in a way that's highly regulated. So we see it as helping orchestrate between AI and humans on a kind of this dance where the AI does the carbs and the human does the protein of the work.
Okay, that's a good way, a good analogy. So your clients are enterprises, right?
Yes.
I'm guessing you saw the Citrini research report that came out a couple of days ago and had a huge impact on the market, even more than the author of the report thought. But essentially, he's painted quite a dystopian view of what's going to happen to white-collar jobs and also to enterprise software businesses.
Yeah.
How do you think this is all going to play out? And specifically, how might it affect a business like yours?
So I think, we've been saying this will happen for over 5 years now. And we've been at the front line iterating very quickly to see how things change. There's a few things in the reports that we really agree with. And we think that it actually underestimates the structural change that we're going to experience as a species. One is kind of, we're surprised at how good our AI is getting. So it's either, two outcomes. Either AI is getting very good, or knowledge work was never that hard to begin with. We think that the bastion of jobs will essentially be regulation, where we can automate almost everything in enterprises, except the laws are still focused on liability assumption by humans.
Interesting.
So to have a human, we call it the cost of oversight and supervised automation.
Yeah. Would you put yourself in the AI disruptor camp or in the other camp, which could be a business that's liable to disruption from all of these new model releases by Anthropic and
I think
Google?
We're on the disruptor camp, but we see ourselves as trying to help enterprises rewire quickly, because every enterprise must rewire to survive. the pricing power you'll have if you do is incredible.
Yeah, so you don't see a point where we get to where AI leads to product commoditization. There'll still be differentiation within the different offerings that are available. I think
so. We're LLM agnostic, and I think we'll benefit and partner. Anthropic as a partner, OpenAI as a partner. But we think it's actually the localization of the processes for every country and every jurisdiction, where how do you figure out which human has to sign off on the AI recommendation? And that's a ground game. Okay, interesting. Let's talk about the company. I know that you actually founded it in the US. You incorporated it in London, but obviously you're based in the UAE now. You have significant backing from these various sovereign wealth fund entities within the UAE. How is that instrumental to your business? So we believe the UAE will play an outsized role to our kind of AI future. We've seen the UAE really walking the walk, and we think that reasonable regulation is a huge part of the future. Yeah. We see it as kind of the demand of knowledge work, and white-collar work is the West, but the supply of white-collar work and knowledge work is the East, and the UAE is in the middle. Yeah. And we call it the skill routes. Yeah. You successfully just completed a pre-Series B funding round. Yes. I know the financials have not been disclosed, but perhaps you can give us a better idea on what the expansion plans, growth plans are from this point onwards. Yeah, so we're over 350 employees right now. We aim to end the year with over 1,000. And we're exporting AI from the UAE all around the world with the US. So I think we aim to be the fastest and most effective way for any enterprise that feels the pressure from that report to help them rewire very quickly. Okay, I'm going to put you on the spot here. Yeah. Your Series A valuation had you at around $300 million. Do you have a target valuation in mind? Yes. Yes. Can you tell us? I mean, we already have a few term sheets that are well above that. Okay. All right. Well, we'll stay tuned then. Maybe at some point a liquidity event in the future. Arya, thank you so much for coming on. Arya Bolurfrushan, AppliedAI CEO and founder. Now for a look at some other stories we're following today. JP Morgan is removing the United Arab Emirates from its emerging market bond indices after it exceeded the bank's measures of wealth for 3 successive years. The move follows similar reclassifications of Kuwait and Qatar last year. The EM-focused funds that track the index are expected to sell UAE bonds, potentially widening spreads in the short term, though analysts say demand from developed market investors could offset the impact. Lebanon's commercial banks say they don't have enough cash to repay depositors under a proposed government plan to plug an $80 billion hole in the financial system. An advisor to the lenders said most banks lack the liquidity, which would allow depositors to reclaim up to $100,000. The IMF has also raised concerns over the draft law, urging improvements to ensure the hierarchy of claims is respected and that losses are not imposed on depositors. And Indian Prime Minister Narendra Modi starts a 2-day visit to Israel later today. He's set to meet with Israeli Prime Minister Benjamin Netanyahu, where both leaders will discuss cooperation in technology defense as well as trade. And coming up, the UAE's aluminium producer Emirates Global Aluminum reports strong full-year net profit. We discuss the numbers and strategy with the CFO next. This is Bloomberg. Emirates Global Aluminum has reported full-year underlying profit of almost 5 billion dirhams. That is a jump of 16% year-on-year. The UAE producer says the bottom line was lifted by record sales, favorable aluminium prices, and cost control. Joining us now is the CFO of Emirates Global Aluminum, Pål Kildemo. Really good to be chatting to you. It's the first time we actually speak to you on this program, so good to have you with us. Really solid results this morning. Talk us through what the drivers were and whether this was actually led by pricing or by volumes.
So in general, pricing plays a big role. Yeah. Aluminium is in high demand at the moment, and we've got aluminium prices at close to historically high levels. Yeah. So that contributes a lot to our bottom line at the end of the day. How do you see the outlook for aluminium prices the rest of 2026? How do you see the market dynamics here? It's good. We have a situation now where customers are demanding more and more aluminium. especially since the price of copper is very high. That's really the material that people are positive to. The good thing with aluminium is that when the price between copper and aluminium becomes large enough, you start seeing substitution. So we're seeing a lot of customers that used to use copper now moving on to aluminium, which is driving demand and pushing prices.
And how much of that is back on, say, production limits or supply limits reached in China? How much of a knock-on effect is that having on the market?
Big.
It is big.
Every bull rally of aluminium historically has usually been killed by oversupplies in China. Now, with the 45 million ton ceiling, this has changed the structural outlook quite a bit.
It's changed the game. How have tariffs affected the industry?
So in general, I think the industry has been able to cope better than many expected. The price in the US has increased just as much as the tariffs have, and we are selling more and more metal into the US to continue to meet their undersupply.
Yeah, so have you had to change anything operationally within the company to work around the Section 232 tariffs imposed by the Trump administration?
Not really. What we've been able to do is redirect more volumes to the US. As you know, some of Canadian volumes that used to go to US are now finding their way to Europe, which opens the room for more metal from the UAE.
Okay, so still a big growth market for you.
It's the biggest growth market, and that's why we're investing in a potential new smelter in the US also.
So I wanted to ask you about that. So the plans for, I believe the smelter is in Oklahoma.
Yes.
Talk us through what you're envisioning there.
This is an extremely exciting project. It's the first smelter to be built in the US in nearly 50 years. It's a 750,000 ton smelter, which will double the local production in the US, and it's based on UAE technology.
And how much of a game changer is it going to be, not just for your company, but also for US production as well?
It will be big for US production. As I said, it will nearly double the production in the US. It will create a lot of employment, 1,000 direct people. But the big effects when you build a smelter is all the indirect employment. Yesterday, we announced an agreement that one of the big downstream customers is now looking to create a facility right next to our smelter also.
Okay, I'm going to take you on slightly different tact. What is the latest on talks with Guinea about a bauxite supply agreement? I know back in 2025, the mining license that you had actually got cancelled, but there are reports that you're back having discussions with them about some form of a supply agreement. Can you give us an update on how those discussions are going and whether it's something we can see at some point in the future?
So as it stands today, as you've seen in our results, we have written off our investments in Guinea. We are not taking any volume out of Guinea, and we've replaced this with volumes from Ghana, from Australia, from Brazil, and from other regions. So there's no volume flowing out of Guinea to us.
Okay. Do you think that at a company level, this whole experience with Guinea has made you reevaluate some of the jurisdictions that you're operating in from a strategic standpoint?
I think in general what we're doing is we're ensuring we have a more diversified source of raw material going forward. So the regions in Africa will still continue to be part of our sourcing as we're doing with Ghana now, but we're also bringing in some from Australia and some from Brazil.
Yeah. In general, how do you see, I mean, we spoke about the geographic potential in the US, but where would you say are the bright spots around the world for your business operations?
So since we produce a lot of the metal in the UAE and the demand in the UAE is limited to a certain extent, we need to base ourselves on international export. And our two biggest export markets is Europe and the US because they are quite short on aluminium. That's why we're growing in both regions. We're building a smelter in the US, we've bought a recycler in the US, and we bought a recycler in Europe. And that recycler in Europe, we are now six-fold increasing the capacity to continue to meet the demand of European customers.
Okay, and I've got to ask you, there's been a lot of speculation about a potential liquidity event. Could we expect an IPO this year? 2026 is going to be the year?
So I will not speculate on any form of IPO. That is a topic for our shareholders.
Okay, fair enough. Well, something we'll keep an eye out for. If it does happen, though, we hope to talk to you. Pål Kildemo, thank you so much for joining us, the CFO of Emirates Global Aluminum. Well, coming up, Nigeria's central bank cuts interest rates by 50 basis points after inflation pressures eased. We'll bring you that story next. This is Bloomberg. Nigeria's central bank has cut interest rates after inflation pressures eased. The Monetary Policy Committee lowered its benchmark policy rates by 50 basis points to 26.5%. For more, we're now joined by Bloomberg Nigeria Bureau Chief Anthony Osai-Brown. Anthony, good to talk to you. Let's talk about the decision yesterday. In line with expectations, does this pave the way for more central bank easing out of Nigeria?
Yeah, it actually paves the way for that to happen, although the central bank governor warned that pre-election spending is likely to pose an upside risk to inflation. And so if you notice, he cut by 25 basis points, which was a bit lower than what analysts expected. Analysts were predicting that he will cut by 100 basis points. So that shows he's still worried about inflation having an upside risk going forward because of pre-election related expenses. Nigeria has this big election next year, national elections next year, and it's likely the government increases spending at least to make sure it delivers on some of its projects ahead of those elections. So that's likely to pose an upside risk to inflation, which the central bank is worried about. But the general expectation is that there's going to be some cuts going forward here.
Okay, so would you say that the perhaps fiscal push might derail this easing cycle? Are there any other factors to be aware of looking ahead?
Yeah, he also mentioned another risk being oil prices, that if oil prices drop significantly, then that could also pose a risk to inflation because that's likely to put pressure on the currency. And imported inflation is a big factor in Nigeria, so that could put a risk to currency weakness, or could trigger currency weakness, so that could worry him, and then that also could be a dampener on cutting inflation going forward. Yeah.
Bloomberg Nigeria Bureau Chief Anthony Osai-Brown, thank you so much for bringing us the latest from the Nigerian Central Bank. Well, Senegal says it's continuing to make progress towards a new program with the IMF. The finance minister says authorities and the lender have agreed on issues including debt and reform actions, with only 2 preliminary measures left to implement. He added the government opposes debt restructuring and will instead pursue active debt management. The new U.S. ambassador to South Africa has struck a conciliatory note in his debut message, contrasting with President Donald Trump's recent criticism of Pretoria. Leo Brent Bosel presented his credentials earlier this week and emphasized shared values and cooperation despite tensions between the two countries. Okay, let's round up the show taking a look at how markets are faring, digesting President Trump's State of the Union speech, defending a lot of their economic actions in the U.S., also doubling down on tariffs as well, saying it is still a preferred tool. Well, this is a bit of an exaggeration, but his hope was that at some point tariffs could replace income taxes. It still pales in comparison in terms of revenue generation. That came out of the State of the Union. And what we saw yesterday in the day of trade is that S&P and NASDAQ both brushed off some of those concerns around AI disruption. NASDAQ actually ended the session up 1%. Positive price action in some of those chip makers. AMD, one of the star performers after inking a deal with Meta. So again, giving the chip makers a bit of a boost there. And all eyes later ahead are going to be on NVIDIA earnings. So you don't want to miss that. Those come after the bell tonight. So that will be a big determinant of market movement from here, given we're discussing AI so much. But the handover from Asia, pretty positive as well. And as we head into the European session, the setup is also quite robust. European futures pointing to a session in green, up 0.2%. And of course, we're continuing to keep a close eye on geopolitics, oil at around $71 here. But that is it for Horizons Middle East and Africa. I'm Joanna Bersechi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.